Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 29th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Hope everybody had a great Memorial Day weekend, a little bit of extended time off, and in that time we didn't have any economic data. Nothing yesterday because bank holidays here and in Great Britain. Pretty quiet day here in the United States again today. Pretty much a lack of data points coming out. So not a whole lot to talk about there either, other than the CV consumer confidence came in at 128.8, expected to be 128.2. So slightly lower than expected, but nothing really to write home about. On to the overall markets. Really, it is a game of moving money today is what it seems like, flight to safety and things of that nature. We can see with crude oil, we would expect a flight to safety would push that up, but I think the lack of demand in crude oil and distilled gasoline all showing up today as we got below that 50-day moving average. The overall market really started sliding. Now, earlier today, we did rally up on that somewhat of a flight to safety as the overall equities were coming off. We did get a bit of a rally and a try for the crude oil. It was up here trading right around 67-ish. A settlement around 67 will make this look like a very nice solid bottom. Right now we're below the trend channel, not good for the bulls. That would really indicate a rollover happening, roll to the downside, maybe even to the back to the point of control where the most time has been spent. As of right now, not looking too good, but if we got a late day rally up into this trend channel, that would look very good. On to gold futures. Gold futures are pushing higher off of the rollover in equities. They're not positive on the day as of right now. As you can see, they're down just over $1, but the more we see equities start to slide, we could see gold start to push higher again. Right now, doesn't look very good as a chart, but later on today is really going to be the discerning factor as we watch equities. I think it's the dog wagging the tail right now on gold, the dog being equities. We got Bitcoin futures up $166. They're really trying to make a bottom here. We've been talking about this. This value area low has acted as support on both of these occasions, but I still expect it to want to roll over and test that 58.80 area. Again, a broken record. I think I say that every day. Bonds moving higher today, almost by 2 points, with the overall economic picture being a bit cloudy. A lot of things going on over in Europe, not looking too good. That would be Europe being Italy or even the Middle East. So a lot of things going on, a lot of tensions, even the North Korean summit, things of that nature, all kind of coming to fruition today, creating a lot of uneasiness or some volatility in there, and flight to safety showing up in the bonds as people pull out of equities. The next safest thing really is the bonds, as it is a government-backed security. All right, so VIX moving higher, back past the 15s, past the 16s, hopefully, and into the 17s by the end of the day. We'll have to see, but right now, right around 1650, as we've been talking about it time and time again. We'll see it here in the equities, down over 360 points. When I just started this, we were about 100 points higher, to be quite honest. We're really seeing the acceleration of the sell-off happening right now with the Dow Jones off over 350 points. The NASDAQ down 45 points. You know, they've tried to pierce through this Fibonacci extension of the 38.2 level several times, 3 times in the last 3 days. So Thursday, Friday, and Thursday, Friday, and today, I believe. Actually, we did have equities open yesterday. I forgot about that. The futures were open. So last 3 days tested that top and failed. So not a good sign for the overall bulls right now. We are still stuck in a bit of a trend here. You can see, I mean, we could even stretch it all the way out to the 23 Fibonacci retracements. The yellow is the extensions. So all of this area right here will act as support. So if you're looking for that, that'd be the place that I would be looking to either get out of my shorts or maybe put your toes in the water to see if it's going to find some support there. And the E-mini S&Ps down 30 points on the day. Let's take a look at the 30-minute chart of the E-mini S&Ps, and this is what I was talking about. When we started this video, we were really coming into this candle here, and as you can see, accelerating, making new lows as we speak during this video. Just bounced a little bit off of the low here, but still very near the lows of the day. All right, the only thing that I'm really looking at doing today is StarBucks. With all of this bad news coming out about Starbucks being the world's largest free bathroom and them having sensitivity trading today, a lot of the Starbucks are shutting down this afternoon. Employees have to come in for sensitivity training. So we're going to have to see how that all shakes out. But as of right now, Starbucks isn't what it used to be as a place to go to get a nice little cup of coffee. Now you get to share with everybody. That's about it. I'm looking for a way to short this. I've looked at a couple put spreads. I'm even doing the put diagonal this week on Thursday. I'm even looking at the put diagonal for Starbucks. So I'm playing around with a lot of things. It's not really lining up with my rules very well for a put diagonal, just for the timing of the expiration cycles of the options right now, but I am looking to play away to the downside with really low implied volatility. I'm probably going to have to go with a debit spread or something along those lines, but as of right now I haven't done anything because I'm just playing around with these strikes and haven't found the right location to fit all my rules for a play to the downside with a market assumption to bearish. All right, so playing around with that for the rest of the day. I'm going to try and find something desperately to short Starbucks. I also need some negative deltas in my overall portfolio, especially if we're going to start seeing some market rollover, because I have long deltas in most of my portfolios. So going to be playing around with that. That's all I got for you guys today. Check out Thursday's webinar. It is going to be, like I said, on the long put diagonal, where we're going to be setting this up. I'm going to show you how to increase your probabilities of success with it. I might even throw it on a little bit early for Starbucks. And then also give me a thumbs up or a thumbs down, like or dislike. If you give me a thumbs down, though, let me know what I'm doing wrong. Give me a thumbs up, give me a comment, whatever you got going on there, all right? So I can start tailoring these to fit your guys' needs. That's it. And other than, if you can't take that, take it easy.